Hey, what's up everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about liquidity sweeps, why liquidity sweeps are so important, and how to trade them in the market. If you're not a member to this channel, go ahead and press subscribe button, guys, because it always helps out the channel and the YouTube algorithm. So go ahead and do that if you haven't done so, and so that you can always get alerted whenever we have new videos uploaded. This is going to be a fun and very informative video, so make sure you stay in and watch the whole entire video. And if you're not a paying member of Royal Blu FX, go ahead to RoyalBluFX.com right now to sign up and join our membership, because starting as of today, we have a one-on-one coaching for a lifetime if you buy our lifetime membership today. So let's begin.
Gentlemen, the king.
All right, what are liquidity sweeps? Liquidity sweeps are generally where there are areas of liquidity like double tops, double bottoms, triple tops, or relatively lows and highs, or potentially a trend line of liquidity where there have been a lot of buyers and sellers that have been in that area where they leave their stop losses for price to go to those stop losses to take out the stop losses, and have been taken out essentially the liquidity, and then the market will then move towards the opposite direction. Okay, so what do I mean by this? Let me just show you this in more of a visual perspective here. Okay, so let's say when prices are pushing bullish like this, and then creating this scenario here where there are double tops like this, we consider this as liquidity because there are sellers that were involved in both of these areas here. Okay, normally a retail trader would be taught on how to trade double tops, right? So you see sellers sold here, sellers sold here, and now when sellers are selling here, they typically put their stop losses just right above these highs. Okay, and so when there's when the stop losses are there, right, typically the market goes towards where the money is, right? So prices push bullish like this, takes out these highs, okay, takes out these liquidity, okay, and then starts pushing prices in the opposite direction. Okay, why? Because we know where price goes, it goes towards liquidity, but it also goes away from liquidity as well after it's done its job. Okay, so as you see, price pushed bearish here, right? There was more liquidity here. These relative, lows here. Prices go back beyond these lows here, right? Takes out the liquidity, right? Probably mitigates something here, and then pushes bullish again, then goes bearish again, right? Stuff like this. Okay, so what a liquidity sweep is essentially when price goes above the liquidity or above the stop losses and below the stop losses and sweeps that liquidity. Okay, now generally the way we trade is based off liquidity, right? When we see liquidity, price goes above it, sweeps it, and then we look to sell away from liquidity. Okay, not towards liquidity. We never trade towards liquidity, and the reason for that is because when you're trading towards liquidity, there's no knowing that price is going to eventually go to liquidity. Just like when price doesn't just like when price doesn't always go to the order blocks that need to mitigate, right? Price doesn't always have to mitigate, or let's just say in this case, banks don't always need to mitigate. Banks don't always need to go and take out liquidity because they have a bigger objective, right? A bigger objective on the higher time frames. They're looking to go after where the big time frame liquidity is and where the big time frame mitigations are. Okay, so in this case, you can see here where prices have swept, right, the highs and the lows. All right, so when we see the sweeps, okay, I want you to think about this. When the sweep has happened, where is that last candle? Since we're seeing this as, let's just say the price is bearish right now because price is going from the highs to the lows, right? Since prices are bearish, where is that last up candle before the major price move bearish? Okay, I'll give you a couple seconds just to think about this because this is a little tricky. Okay, let me know when you guys finish. Or you guys won't let me know when you finish because you guys can't talk to me right now. Okay, so I'll tell you where the answer is. Okay, the last up candle is the last order block is where the sweep has happened, right here. Now the reason why is because when the sweep has happened, okay, prices generally tend to push bearish very fast, impulsively down to the downside. Okay, and when this happens, right, when this occurs, there's the order block that has left naked right here without it being mitigated, okay? Generally, what we're looking for in this area is for prices to, let me just do this so I can show you guys a bit what it looks like here, okay? Generally, when prices are at this high, okay, let me just push this even higher because we're looking for the downtrend. When prices have come and swept, okay, what we're generally looking for here is for prices to give us a chalk, a break, and a mitigation, okay? A chalk like this to break and mitigate and then push bearish, right? If prices aren't mitigated at this high, okay, if they haven't been mitigated, that means that price hasn't given, prices left this area unmitigated, and prices will come here and give us the intention of coming to mitigate here eventually when price is ready to come there, right? So when we see a break of structure and we see the scenario play out like this, liquidity taken swept from the highs, liquidity swept from the lows like this, we know that price is coming back to mitigate. Why? Because they want to come and mitigate this position, close their last position, which is that last up move here, okay, and then come and mitigate and then push price bearish, okay, because we're following order flow like this, okay, prices are going low, high, right? So if prices intend to continue bearish, this is our last indication here. That's what a sweep is. A sweep has pretty much just left an order block that was unmitigated for prices to come here eventually, for prices to continue bearish like this, okay? So we can trade both ways. We can trade when price is taking out liquidity, then trade and look for the chalk in here, and then look to sell it off. And if price hasn't mitigated this area, then we'd wait patiently for price to come back here, and then look to sell, look to trade this. And then we would look for the chalk, appropriate chalk like this, right, for the sell from the supply zone. Okay. Same thing happens when price is bullish. Okay. Let's look at when price is bullish. Something like this. If we're coming from the lows, right, we're looking for prices to create a double bottom, what have you, something like this, right? Prices go up, come and take that liquidity, right? They mitigate an order block like this, and then they swept the lows here, right? You can see that there's this relative low right here that you see, right? A relative double bottom right here, boom, boom, right? And because you can see where prices have been bought twice, right? Now, in order to consider something liquidity, you need to be able to see that the lows and the highs are relatively close to each other, okay? They're like bunched up together. And then when price sweeps it, it just goes like this, right? It just goes bullish. And then you're thinking to yourself, oh goodness, where is this order block? Well, the order block is right here, where that sweep has happened. Okay, and prices impulsively move to the upside. Now we can expect for price to get back here. Okay, so we can trade the sweeps after the sweeps have been taken. Okay, so you can tell yourself, I just want to be a trader that trades the sweeps only. Okay, and then once the sweep happens, that is when you are looking for price to come bearish like this, then look for the appropriate chalk like this, and then look for prices to push bullish like this, okay? That's only if price wants to push the markets high, right? And the way we know this is when prices do break that high. That gives us the guarantee, somewhat of a guarantee, that prices are still interested in pushing bullish. Therefore, we have what's called a protected low, right? A protected low and a strong high, right? Or you can call it a weak low and a strong high, right? A protected low, which means theoretically price should not be able to break this low. Therefore, we need for prices to respect the supply zone and then push bullish like this, okay? So that's what it is, okay? So this is just one form of a liquidity sweep. You can also look at liquidity sweeps on a trend line liquidity basis, something like this, when prices are creating, a break in mitigation form like this, right? So prices are pushing bullish, right? Like this, you can see all this liquidity is being built, and all of a sudden prices just take out the liquidity like this. All like this, right? And now prices are just pushing bullish like this, right? And now you got to think to yourself, where is that last order block? Well, the order block was right here, right? And now you wait for prices to come back down again, from here to here, right, like this, and then push bullish. All right, so you can see it in many ways, but what I want to do now is go on the live chart, guys, just to kind of show you how to look to trade the liquidity sweeps. Because these, if you guys trade the liquidity sweeps, I'm telling you, they're so powerful, because now you get to understand where that last order block is. All right, so right here we're on a live chart. I did the liberty of cutting the market back, on a 15-minute time frame, just so we can have enough data to work with. All right, so here's how you identify the liquidity sweeps. Okay, so I'm going to start playing the market right now, and you're going to see what I'm doing here. So when prices are going bearish, right, what we're looking for right now is a sweep. And a sweep is generally an area where price overextends, sweeps the highs or the lows of the previous structure, and then pushes bearish or bullish. So right here you can see where prices are bullish, they've overextended, and they've broken this high right over here, so this would be considered the sweep right over here, okay? And when prices pushed bearish, you can see that prices pushed bullish over here, mitigated the supply zone, and then what do you see? Price going bearish, right? Okay, so let's continue here. Right now we don't see any other liquidity sweeps, but I'm going to show you right here. Okay, so here's a liquidity sweep. Right over here, there's a break of structure to the upside, right, and all of a sudden price breaks to the downside, right? So now we gotta be asking ourselves, where is that last candle, right? Where's that last up candle before the major move pushed bearish? Okay, you can see that this area here, you can see that this wick here, there were buyers that were involved that pushed bullish here and mitigated this entire wick. Now this really depends on which wick you choose. It could either be this entire wick as far as where the last order block is, or it could sometimes be this right here, this little bit of area right there, this little wick that's poking out. It's actually this big wick, but it's this little bit of space between this wick and this wick here. So these are the two areas that are pretty much the last order block, or that have the last order block before the major trend move bearish. Okay, so now let's see what happens when price pushes bullish. We're looking for prices to come back to this area and mitigate. All right, so this area was mitigated, right? I'm not teaching you how to enter this, obviously. I'm just trying to show you how prices come back to the areas where they have swept the highs or the lows. In this case, it swept the highs. So let's see what happens. All right, there we go. So you can see where price did test this this wick here, this high, okay, and where prices faked us out, right? Prices went bullish again and came and mitigated this high now. There was a hidden order block in here, and prices went bearish, right? So our anticipation is to enter this market and then hold the market until it goes at least down to this low. Let's look for more sweeps, okay? All right, so once we have this push here to the downside, I can see another sweep, okay? I can see it right here, okay, right here. Okay, and the reason why that would be the sweep is because we had a buy to sell, and this area here broke the high, and so what we're anticipating is for the markets to come back and mitigate this area here. Although I could see right here is where prices already mitigated based off of this bullish, or at least this doji right here, where prices broke below, came back, and wicked and mitigated this high. Now, of course, prices can come up even above these highs because we have some liquidity sitting right below it, right there, okay? So prices can still come up here if they choose to do so, but if we zoom out, I want to show you something here. Notice how here, right over here, this is our major liquidity sweep from here, okay? So technically, speaking, that this low here broke this high, so we have this whole push to the upside that swept this high here, right? And when prices broke, they didn't mitigate this area, so we do have a hidden order block in here, and prices are going to come here eventually and mitigate. Okay, so let's see what happens over here when we play this. Okay, let's play this. All right, prices are bearish, they broke a new structure. Oh, let me pause there for a second, guys. Okay, if I extend this, notice what happened here. We had this area here, this major order block here, that wasn't mitigated, which we would consider as our extreme, okay, as our extreme high. But then we have our internal structure that pushed bearish here, and we noticed that this is an area here where it had liquidity, and it also had an area where the last order block was hidden based off of this sweep. Okay, so this area again broke above, swept the highs, pushed bearish, and it left an order block, an unmitigated order block right over there, and there's where you could have sold, right? So let's just zoom out a little bit for a second, okay? So I want you to guys see now when prices are pushing bullish here, you can see how prices aggressively pushed bullish, right? Although nothing in here was mitigated, right? What do you notice right here? We have an area where price swept the lows and pushed bullish but didn't mitigate, and now prices come here right on demand, okay? right at the demand area, and then they've reacted off of this demand zone, right? Now we're expecting for price to go bullish. All right, so prices did go bullish, right, but not all the way to the extent where we're thinking where price should go, obviously. Now the whole idea here is to obviously trade with the trend, not against the trend, right? But this is just a mere example of showing you guys how to see the sweeps. Okay, so let's continue here. All right. Oh, very interesting here. Okay, so prices just pushed way bullish over here. Let's just see where prices are going to react. Now if we zoom out, I want you guys to see something here. Okay, now obviously if you understand structure, you're going to understand why prices are pushing bullish. Like we have major structure, sub and minor structure, and microstructure. Right over here, as you can see, was the last area where prices have swept, right over here, right? Because this low swept the high and pushed the markets all the way bearish, right? So what we're expecting here is for prices to actually see where the last area was swept. This was the last area that swept. When price broke, it actually came and mitigated the supply zone, right? So this supply zone is our extreme, although it has already been mitigated, but it doesn't necessarily mean that prices will not come back to the sweep, okay? What we're anticipating is for prices to go to an area where prices have swept, okay? Where the markets have swept a higher or low, and then we look to react off of that market, okay? So let me just play this over here, okay? So what do I see here? Right here, when there was a break, right, I mentioned to you guys here there was a break, there was a sweep, but it never mitigated, right? When prices pushed bearish, it never mitigated. All right, so what I'm going to do here is mark this as our last high, because this is our last high here when prices broke bearish. They've never been mitigated, and you can see here this low here mitigated this high, so this is already voided, right? And now when we go down here, when you see another break of structure, say right here, right over here, okay, notice that this high here swept, but it didn't mitigate. Let's zoom in here and so I can show you guys right here, right? Okay, look at that. This was a high here that was swept, but it was never mitigated, right? So we're anticipating for the markets to come right over here and then push bearish. Now what do I also see here? Now I want you to guys to watch this, okay? I'm expecting a sell in this area, and I'm also expecting a buy in this area, okay? Here's an area where prices have swept the lows. So this is where prices should come and go bearish from here. Bearish from here, okay? So you can see where prices have reacted, right? Although they haven't pushed all the way bearish here, which is no problem, right? If we zoom out, we can also see that this is our extreme, which means we can still play off the sweep. Let me just make sure here, double check over here. There is a sweep here that has been mitigated. So let's look for this area here. Prices may come and mitigate there and then push bearish here. Let's see what happens. All right, there you go. So prices haven't quite mitigated that high, but let's see, do we even have our supply zone correctly from here to here? All right, there we go. All right, so whether that kind of missed us a little bit right there, obviously, but we're anticipating for price to go bearish. All right, notice how price is going bearish here. All right, and again, all because this area here swept the highs and was never mitigated, right? Now we're expecting a buy here, or at least for prices to come and tap this demand zone and then turn bullish over here. Let's see what happens. All right, notice what's happening, guys. We're consolidating a little bit. Okay, there's a push, an aggression, and there you go. Prices are pushing bullish from here. You can see that the reason why this is happening is because, well, number one, because we have a sweep. Prices this low here that you see, this wick, swept all this liquidity right over here, right? And then pushed bullish without even mitigating. So there's an empty order block inside here, or excuse me, an order block that you cannot see as the reason as to why prices are doing this, right? Why they're behaving like this, okay? And then, yeah, guys, that's it, all right? I hope you guys understood how to see the sweeps, okay? Now, I'm not saying for you guys to enter off of the sweeps right away. Obviously, you need to be able to see confirmations, right? You need to have a confirmation here, obviously. You can't just enter off a sweep just because the markets have swept, right? What we are doing is anticipating for prices to get to these areas because that's where prices are reacting off to, right? You can use them both for buying and for selling. Obviously, you can use them for supply and demand areas as well because they work perfectly for supply and demands, all right? So I hope you guys learned in terms of where supply and demands, or excuse me, how sweeps work here, okay? Please, if you like this video so much, guys, go ahead and throw a thumbs up on this video and definitely consider subscribing to the channel because we always leave free content. Until then, we'll see you then.